The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 4th fabulous Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary, an extended weekend. You got to love those. Of course, the easiest way to do that, folks, it's to always remember that life happens for us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance. Think about that. Think about spreading that around the world. That is, as Tommy likes to say, that is a beautiful thing, folks. I'll tell you another beautiful thing. I'm absolutely grateful for your presence here today. Now, I'm here to serve you. So feel free to pick up that phone, dial in an 877-927-6648, internationally 727-445-1044. You can send me emails. Oftentimes I see those during the show, of course, inside the Tiger's Den. You can always post something there. So just love to hear from you. So let's get this show started. It is Fantastic Friday. Of course, none other than the Hotel California, sponsored by Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 309 points at 16,066. S&P down 34 points at 1916. This is the new normal, is it not? We've got the NASDAQ down 63 points at 4670. Russell 2000 off about 11 points at 1133. The DAX, she closed down 279 points. The FTSE off 151. Gold's back $3 right now. Silver's off 12 pennies. Light sweet crude is basically flat. Trade out at 46.70. Leading the charge the upside. If we can try to find individual stocks, BoFi Holdings out there, it's up $4. Oxford Industries up 370. Culp up 350. I think that pretty much does it. AutoZone is taking it to the downside dollar-wise, off $11.59. Priceline off $12. Google down $9. Amazon off $7. Regeneron off $7.50. BlackRock down $6. Tesla off about $6. Goldman Sachs down $5. We got enough to take a look at out here. So where do we begin? Let's begin with. Let me see. Let's begin here. Let's go take a look at the market breadth. So that's one place to start. Let's actually take a look at what's going on inside the New York Stock Exchange. So New York Stock Exchange right now, net declining issues 1,811. Yesterday we took a look at that price oscillator. It was above zero. It finished above zero when we went into the trading, and we closed the trading session. Only needed 1,567 net declining issues today in order to turn that thing to the red side. So as we switch over, or below the zero line, as we switch over, take a look at it, you're going to see it's just slightly below that level. Now, on a day when the market is, the Dow, I should say, is down 300 points, and the New York Stock Exchange has just really poked its head below the zero line out here. This is where I suppose, just simply to steal one of Tom's uses of language, devious markets out here. We know that the market's pulling. Well, you don't know that yet. We're going to go take a look at it. The market's pulling back on light volume. Right, you pull back on light volume, and when I say we'll go take a look at those benchmarks out here. The point is, at 4 o'clock, if somehow this price oscillator remains above zero, and we're pulling back on a light volume, what you can anticipate is a bounce on Tuesday. How, why, I don't know. That's what you can anticipate. If, on the other hand, the market closes poorly, and we can go take a look at the DAX and the FTSE to get some type of feel there. But the reality is it just doesn't matter what we go take a look at. It's what does it do at the 4 o'clock session out here? Now, the reason why I bring that up is because the NASDAQ Composite, which is trading out at 46.71. That only needed 1,197 net declining issues. Its price oscillator is still above zero. So we really do have a so-called deviant type market out here. We don't have consistency. We don't have synergy, right? Remember years ago, I don't know, when I say years ago, let's see, I think I began using that word synergy in presentations back when I was selling PCs to America, especially to Florida. I was back in the 80s, started a division of a publicly held retail company. We started from zero. In 5 years, we went from zero to $100 million in sales. That was quite a business to be in. Of course, we went from a retailer and a distributor of products to basically what turned into nothing more than a bank and a inventory management system. Because when you start doing $10 million a month in sales, and a lot of those are to your corporate accounts out there, let me tell you, you become a bank, because collecting those receivables is important. Turning that inventory is important. You don't really care about that. What you want to know is, what are the markets doing? So I'm giving it to you straight with regard to what the markets are doing. The Dow here, the Dow has been a weak link with regard to its ability to get up and over that zero line. It did yesterday, just by a smidgen, and today back to the downside out here. So that's what's going on as we take a look at the broad market, so to speak. If we take a look at the VIX index moving higher, up today at 2864, greater than 10% one-day rate of change. Right now you're up at 12% reading. Typically, and I will tell you, 90% of the time, that typically means the next trading session would be a bounce. If the market were to close here, this would be the message that I would be giving to you. If we take a look at the ETF structures out here, the number to be paying attention to, as it was yesterday, inside of the QQQ series ETF, is going to be 102.53. We're trading below that. You're trading at 101.90. Now, and there's a number of different ways for us to try to benchmark this volume. Now, you're at 30 million shares. I don't have my spreadsheet up, but we're at 30 million shares. We've got 3 hours. You know, doubling it doesn't make sense, especially on a day like today when the traffic is busy at the airport with people into different vacation spots just to get it out of their system, I suppose. But if we take a look at today's volume, 30 million, what are we going to finish at? 50 million shares. If we take a look at the last time that we were pulling back, which was on September 1st, you're trading, September 1st, you're trading into that swing point. I'll put my little data window over here. That way you can see when I've got my cursor. The very bottom says volume. You can see that. You've got 73 million shares out there, and you're pulling back into that with light volume. I'm going to estimate that today's volume, is going to be somewhere around 50 million. Nonetheless, if you close below 103.29, it says, you go test 100.63. Of course, we know there's no chance that it's anywhere near the type of volume from August 24th. If we just simply use the following day, you've got 75 million again. You've got 104 million the next day, meaning August the 26th. But we can pretty much use September 1st as our gauge out here. So inside the Qs, now what would be even more miraculous would be to close above 102.53. Now, either one of these, the Qs are pulling back on light volume. That is its message. Anything can happen, but I seriously doubt we're going to see big volume in the next 3 hours inside these markets out here. If we take a look at the Russell 2000, the IWM, on its daily chart out here. Let me get rid of these retracement levels out here. It is pulling back today with 17 million shares. Now, if we take a look at that September 1st swing point, let's go ahead and do the same thing. Let's go ahead and pull this data window down. So September 1st is our gauge. Last time down was with 45 million. You're down with 17 million. You're not going to double it. So we've got the IWM pulling back on light volume. Nonetheless, you close below, where's the number? 114.12. Pretty good chance it's going to do that. That says you go down and test at least the 111.60 area. That is its message. If we go take a look at the SPYs out here, right now they're trading out at 192.10. If we look at the volume characteristic here, you're doing 100 million, a little over 100 million, and you're pulling back into 256 million shares. So so what does that say? You haven't tested the low. Right? When you're pulling back into a swing point, the best that we can do is just simply gauge, hey, are you moving down with volume or not? But when you close inside a swing point, doesn't matter whether it's volume or not, you can go test the top or the bottom. When you're pulling back, you can go test the bottom. If, in fact, we were to see the SPYs, and they could, anything can happen, can get down to test 190.73, do that on light volume, well, then guess what? Then you have a failure on price and volume inside of the SPY, at least on a shorter-term basis out here. Let's go take a look at the Dow Diamonds, see what, and there's probably no chance in all holy heck that the SPYs are going to reject the swing point from August 24th and get above 195.94. You see that line going across my screen, but there's no real reason for you and I to take a look at that. If we look at the Dow Diamonds out here, inside the Dow Diamonds, it's pulling back into that September 1st swing point. That's got 14 million shares. You're at 4.5. Hey, even best case inside the Dow, which is a weak link, a real weak link out here, even if we doubled it, it's not going to anywhere approach volume of 14.2 million shares. Nonetheless, you have not tested the low of that swing point. The low of that swing point from September 1st will be 159.74. The low so far inter-session has been 160.5, 160.51. It's doable. It'll be an ugly close for sure if, in fact, that occurs. And it could be an ugly close for sure. So what we know about the markets, 1,567 net declining issues. In order for the New York Stock Exchange to be able to get its price oscillator down below zero, you're there right now, but just by the hair on my chinny chin chin. If you take a look at the NASDAQ composite, it still is in the hands of the buyers. You know, it's struggling. It's trying to go ahead and keep the market to the upside. It only needs 1,197. Now, look, if at the end of the day, the NASDAQ composite begins to fall apart, its price oscillator gets below zero, then you will have that term synergy. Oh, there we go back to that synergy, which we used back in the 80s out there, right? We were trying to sell synergy, if you will. Now, that's what's going on in the markets with regard to the indices out here. Let's go take a look at Goldilocks. Why do we want to take a look at Goldilocks? Because right now it's trading back about $4, trading out at 1120.90. Now, this is kind of interesting because when I came on the air, I'm always looking for, I always like to just sit down in the catbird seat and then start to look for pieces of little morsels of information that can assist you in trading out here. And if we take a look at gold, you know that I've gone through this over the last several weeks, and certainly this week, most importantly, with regard to taking a look at gold priced in euros versus dollars. Now, we take a look at both of them. If we take a look at gold priced in dollars, we know that during the week it ran into resistance of a shorter term descending trend line. That was on September the 1st. That's a little yellow diagonal line going across my screen out there. Now, couldn't bust it up, came down to support. The actual support level, if we use our TAS market profiles, thank you, Mr. John Logan out here, that says the bottom is 1114.50. The actual low we've seen is 1115.40. A little dyslexic there, but dyslexia is really a good thing. You know why? Because you get to see things a little differently out there. Hey, if you want the same results, just keep doing the same thing. In any event, we haven't really tested the bottom of that level, but it hasn't busted it out either. Now, gold in priced in euros this morning tried to bust through that trend line. It was close. It was so close. It was so close, Stevie was getting ready to flip the trigger switch to say time to come into gold. Because if we see a break of that trend line, it is my belief, maybe not yours, but it's my belief that that's where we're going to see an initiation move to the upside, a wave of orders for those that follow gold priced in euros. Of course, you do that here at TFNN with Stevie Boy. When we get back, I'm going to go show you the interesting thing inside of gold that's in the 300-minute chart. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 334. S&P is down 37 points. Back to Goldilocks here just for a moment. One of the things that I noticed and taking a look at gold and looking at it on the 5-hour chart out here was that I noticed. So we know that gold priced in euros is headed back towards support. We know that gold this morning tested the support of its TAS market profile. We know we're trading in a very narrow range out here. Now, on the 5-hour chart, there's really two patterns that are in play. Number one, and the pattern that we're taking a look, and it's a 5-hour chart, so this candle here doesn't finish until 2 p.m. So we've got 35 minutes left in the time frame of this candle. But we are in a fifth wave to the downside. We know on a daily basis we've come into support, and what we have is a hammer candle. Hammer candle, in essence, says that the market is trying to hammer out a bottom. That's why when you see it close below a hammer candle, it's kind of like look out below. It is no different than, watching, a good battle, a good fight out here. Your line of demarcation, they're really set. That's the nice thing about the market. That's the nice thing about buyers and sellers, is that they provide you and I with signals to jump out, get out. Like we've got a question of the den. We're going to go take a look at the equity here, and the question is, hey, what should I do? Should I sell now? Should I wait for a bounce? What should I do? Those kinds of things. Same kind of thing here. Now, if in fact we get a hammer candle, That alone, and trust me, I've back tested this, so I'll save you the time and effort. A hammer alone is not a reason to go long on an equity. A hammer candle, when you get it closed below it, is reason to go ahead and exit some type of long position, assuming that you know where the next level of support is, because maybe it's not that much further down. That's really what it means when you break one level of support, you go to the next level of support out there. Now, inside of gold, if in fact you were to, well, and I don't know that it's going to be a hammer candle. We just know that it is right now. Whether it is or it isn't, if this fails, where price would move down to, there's an A to B equals CD pattern that is in play here. And that A to B equals CD pattern, if in fact gold continues to move lower, hammer candle or not, gives you a price projection of $1,094. We'll call it $1,095. And I'm not saying we're going there, because we've taken a look at a couple of those other charts that say that we've got some potential support. Those support levels fail. That's where, hey, that's a minimum as far as to where Goldilocks will head to. It could easily do more than a 1-to-1 A to B equals CD. Your 1-to-1.27 takes you to 1080 out there. So that's what's going on. If we take a look at the 120-minute chart, let me just go see if there's anything else out here for us to gauge as to what may be going on. So give me a moment here. We got to clean up this chart. So now we're going from a 5-hour chart. We're going to go ahead and rise up to a 2-hour time frame chart out here. And we don't have any kind of similar message as I take a look at what gold is doing. Yeah, I've got the December contract up, so I don't take a look at anything that's happening. Now, of course, when gold made its high out here on the 2-hour chart, when I'm talking about its high, I'm referring to 10 o'clock in the morning on August 24th out there. It was moving higher with less relative strength. Had a nice little bearish engulfing candle at 12 noon. That was your signal, if you were long in gold or the miners, to just simply get out of Dodge out there. So these patterns, they work all time frames. Just like yesterday, we took a look at the NQ, right? We took a look at the NQ on a 30-minute chart. We'll go do that right now, as long as I mention that. See how this just flows? It's just natural flowing, baby. If we take a look at the NQ, it made a high at 9 o'clock in the morning. That was, that was yesterday, September the 3rd. It did that with a 7th wave. It did that with price relative strength divergence to the upside. And now what we've got, and this is kind of the interesting thing here with the setup with regard to the markets overall, we know, as we've taken a look at, they're pulling back on light volume. We also know inside the NQ on a 30-minute basis, it's made 6 out of potential 7 waves, but it has, in doing so, it actually, and it's got that price relative strength divergent pattern. And as it did that, it did form this 3-river Morningstar candle formation. That meant the 9 o'clock candle, the 9:30, and the 10 a.m. candle. That says that there's some pretty decent support at those lows. They have not been taken out. Doesn't mean that they won't. We also know, in looking at this chart, pretty stiff resistance at the top of its TAS market profile on a 30-minute basis. So 4204 becomes a significant level of support, just like this morning's low, which is priced out at 41.55, becomes pretty important support. But not so important that if it breaks that it's curtains out here, because all that would do is get you down into that 7th wave pattern, the same thing that was able to call the top on the short-term basis up at the highs out there. So that's what's going on inside of the markets. Now to the question as to what's happening inside of DLS. Ah, son of a gun. You got to wait till we come back from this next break out there. And that's going to be, we're going to look at the Wisdom Tree International Small Cap Fund. And it doesn't look good. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Oh, the tension of what's going on inside of DLS is the ticker symbol. That's the Wisdom Tree International Small Cap Fund. Now, if you're watching us on Tiger TV, I hope you are. If you're listening on the radio, your mobile device at tfnn.mobi, we absolutely appreciate that. Maybe you're listening in on the Apple download version. Maybe you are... But you can always catch the archive of this show on Channel 9. That way you can see these charts out here. Now, we're using, in this case here, the analysis of what's going on inside of DLS. We're just using some very simple techniques that you can use at home. So you don't have to worry about Stevie talking about the lightning bolt pattern, A to B equals CD, retracements, all that. We're just using trend lines out here. If we take a look at, and this is important because this will be my segue into the potential problems that we have inside the markets overall. And I'll try to get all this done here in the next half an hour. If we take a look at DLS Wisdom Tree and you come back to the 2007 high, your message that it was okay to come in. This is a lagging indicator, but it's nonetheless it's one worth paying attention to, which is just simply the trend line, right? The trend is your friend. Number of different ways to calculate that. Your message to actually come in long that the trend had changed was back in October of 2009 out there. Now, the same pattern, if we go take a look at it where we're at right now, and this is where you got trouble, if we come off of the lows out here from back in March of 2009, your next touch point inside this ETF is July in 2012. And then, in fact, what we saw was a touching of that level back in January of 2015. Now, the problem here is that this is a monthly chart, by the way, that we're looking at. Is that last month you closed right on support. This month you are below that support level. And that is a problem. This says that the trend has broken. Now, that's the monthly. We'll just switch over to the weekly chart out here. And the reason why I want to take a look at the weekly chart is now we want to take a look at some horizontal lines of support. And the horizontal line of support that we're looking at is the swing point. It's a trading session from December 15, 2014. Now, inside this equity for this week specifically, remember we took a look. Well, we didn't take a look at the weekly ETFs. We ought to go do that. Thank you for even mentioning that to me. But if we take a look at the weekly chart here now for this ETF, you are inside. By the way, you're inside the swing point. The top is 55.90. The bottom is 54.33. The volume on there is 434,000 shares. 434,000, and you are into that bar with 537. The question was, should I sell it now? Here's what you are going to get. Because you're closing inside this candle with volume, you are likely going to get a test of the bottom, 54.33. It's at that point in time where you would likely be able to determine whether you should be bailing on it. Because if you close below that, price will, or let me tell you where price is likely going to go. You see this hammer candle on a weekly basis down here from June 24, 2013. That's priced between 50.71 and 52.52. You've got to be able to make the money management decision as to, where to, because it always depends on where you're at inside this trade. But at this stage here, what we know about the DLS, the Wisdom Tree International Small Cap, it's broken its trend. And it's more of a sign to be looking to the short side of this trade as opposed to the long side of this trade. Now, and that whole A to B equals CD, if this thing had closed this week below 54.33 out there, you'd actually have a confirmed A to B equals CD to the downside. You may say, what is that? The market works in these nice little lightning bolt type patterns out here where we can go ahead and we can project where price is going to head to. Now, the 1-to-1 on this takes you to 52.73. Now, we may get more than a 1-to-1. We probably will, and I should try to turn that on. I didn't realize I had that turned off out here, but so be it. Well, it will be a white line that shows up on my screen out there. There's the white line. It says price is headed to 52.73 or 49.48. I would say if you break through that swing point from the week of December 15th, you're probably, well, one, you're headed to the hammer candle, and you may be headed lower, 49.48. So hopefully that assists you inside the Tiger's Den with regard to what's going on in DLS. Now, we go from DLS all the way over to what's going on inside our markets. And we'll start off by taking a look at the futures contract because there's a little bit of divergence here. And if we take a look at the 4 different monthly futures contracts out here, upper left is the S&P, upper right is the Dow, lower left is the NQ, lower right is Russell 2000. Focus on the Dow out here. And you can see that even with the push lower here, we know we're coming back on light volume. Even with the push lower, price is really right at that trend line. I mean, it's like right on the trend line, using the March 09 lows, using the October 2000 lows out here. Look, if we're not really in the beginning of a bear market, this is the best buying opportunity that you could find out here. I'm not necessarily buying into that camp. But if in fact we were, and anything could happen out here, this is your buying opportunity. Instead, if like in DLS, we see a close below this trend line out here, and the Dow is going to be the first one. You can see if you take a look at all 4 of these ETFs, or all 4 of these futures contracts, Russell 2000, the trend is still the upside. The NASDAQ trend is still the upside. S&P trend is still the upside. Now let's look at the futures contract. Let's go switch from the futures contract over into the indexes out here. Now you're going to see 6 of them. You're going to see the Dow on the left-hand side. You'll see the S&P in the center. You'll see the NASDAQ composite to the right. Russell 2000, lower left, transports in the dead center, bottom line of New York Stock Exchange on the right-hand side. My opinion is it's the Dow and the New York Stock Exchange are the two key levels for you and I to be paying attention to. You see, in the case of the Dow, you're basically right on that trend line right now. You're really more like breaking it as opposed to, really right on it as far as now it's a monthly chart that we're looking at. So we're early in the month. I recognize that. But if we switch over to a weekly chart out here, we're going to see that we're closing below it for the week. Let's just do that. I would not want you to just, take my word for it, for goodness sake. Make me prove it. Now, last week we had a hammer candle out there. So until the Dow actually closes below that hammer candle, then until that occurs, you can't say curtains. But we're really close to half of the curtains inside your room really being closed because we are now trading below that trend line. If we take a look at this, let's just pull this back. We have not closed below that trend line until right now. This week, I'm assuming that I'm not going to make the assumption. We'll just see what happens at 2 o'clock or on Tuesday at 1 o'clock or so when we get back. But right now, looks like we are actually closing below that trend line. Now, why is that important to you? Well, what's important to you is if you just simply take a look at every time that the Dow, now, when I say every time, it's not like we have a ton of instances for us to go take a look at it. But the instances that we do have to take a look at it, we can say, shoot, what did that mean? And I'm talking about the trend line from 1994 up into, in essence, the trend line into 2007. It took a while for that trend line to be broken, but it was broken with conviction back in September 2001. If we take a look at the 2007 top, it was broken with conviction back in June of 2008. It had a huge, now, people talk about 10% as a correction. And I mean, give me a break. You and I look at the 0.618 retracement level as just a natural level for price to pull to. How about 3.382, a dead cat bounce? Hey, let's look at 0.382. You break the trend line, you go down to that next level of support. It just so happens that at the 0.382 retracement level, 13,820, you're really not that far above the highs from October of 2007 at 14,118. So if the market does continue to move to the downside, which I suspect it will, your first target, quite frankly, becomes at 13,820 to 14,118 from a price point standpoint. But look, it's not just the Dow, it's really the New York Stock Exchange that we also want to pay attention to. Now, the New York Stock Exchange, this actually looks worse than the Dow. It's as if the New York Stock Exchange has already given us the signal. It hasn't broken the trend. No question about that. That's a trend coming off of the March 2009 low, right? You take that touch point, you go ahead, you take this touch point out here from October 2011. And last month, again, a monthly chart that you and I are taking a look at, price stopped right there. How does it do that? Because it wanted to defend that trend, because there were screens all across the world out here that were taking a look at that trend and saying, we're still in an uptrend, we're going to buy that trend. That's exactly what took place out here. It just doesn't happen by magic, by Stevie sprinkling fairy dust all over the place. That's why it's important to take a look at those trends, because, in the battle of Thermopylae or any other battle that's out there, it's really important to have more than just one defensible line out here. And when one falls, you go back to the next one. Well, the actual line, the first line inside of the New York Stock Exchange for support was 10,387. That was the actual high in 2007 out here. And remember, we took a look at where is it the Dow would likely fall to, that 2007 high. Now, this is a huge consolidation pattern inside the NYSE. When you break back inside a consolidation pattern, doesn't matter who you are, shoot, you can run all the way down to the bottom. I'm not in that camp of saying that's where it's going to run. And we haven't really broken that trend. So you've got a battle here that's going on. But if you do break this trend, you're going to have two lines of demarcation inside the NYSE that says, guess what? Curtains out here for the general broad market. That says that the NYSE first move takes you back in the 85-58 area out here. And that's what it would insinuate, indicate to both you and I. Now, you take a look at the other structures out here. Now, I say in the Russell 2000, that would be the third one to fall. And then when I say that would be the third one to fall, that would be the one that would give us information as well. What's interesting about the Russell 2000, we've taken a look at, you and I, take a look at trend lines to the upside off of the lows out here from March of 09 and so on. What's interesting about the Russell 2000 is take a look at the little trend line off of the top out here from March of 2000 to hitting the June of 2007 level. Now, this area has been tested several times as a support structure. It was tested back here in May of 2014, again in October of 2014, and it held. And a third time, which is the charm, and that was last month. Again, a monthly chart that we're looking at. Right now, you got the Russell 2000 trading basically down into that level. If that level fails, we see a close below. I don't know what the price point is, but certainly if I use the low of last week, that'll work, 1102.57. So you close somewhere around 1102.57 on a weekly basis. Price will go down and at least test the next level of support, which is going to be that rising trend line off of the March 09 area. So we're taking a look at three indices out here, three indexes. One which has already given us a message, that being the Dow, that there's real problems out here, real problems that's broken the long-term trend line. Now we've got the New York Stock Exchange that's given us an area where it has failed in its battle line out here. And we'll take a look at, we'll watch that as well as we will the Russell 2000 to give us further indication. And it's going to be one falling at a potentially falling at a time out here. That's the bearish side. The bullish side is that these trends hold. And we've got to be able to take a look at both sides of the market out here. You always have to be able to take a look at both sides of the market out here. So that's what's going on as I see it with regard to the larger picture. Now, another question inside of the den was and or is to go take a look at the XIV, the inverse of the VIX index. Let's go take a look at the VIX index. Let's go take a look at it. What do we know about it? Well, number one, on a daily basis, if you take a look at my chart out here, my screen, you can see that today's move so far is up $3.30. It's up 12.89%. Probability of a bounce on the next session. Now, that bounce can be with inside the futures market out here, but the probability of a bounce is 90%. It's been 90% since for the last several years. On average, it's about a 75 to 80% chance of a bounce within two trading sessions out there. So that's its message. It's short term. What else do we know about the VIX? Well, number one, trade above the 50-day exponential moving average. Danger. And it has nothing to do with who cares what the price of the VIX is. Well, I know that many people do, and but with regard to you and I, we don't really care about that. What we want to know is where is it trading in relation to the, let me do this out here, in relation to its 50-day exponential moving average line. Why is that? Because history. History is no mystery. If we take a look at the VIX index out here, the yellow line is a 50-day exponential moving average out here. So don't worry about what it's priced at. Worry about where it's priced in relation to the market. When price, here's where it's priced out at $47. I know for some of you who've seen this for a while, but it's just so helpful to go back and take a look at this because sometimes people get too fixated on what the price of the VIX is. On the other hand, take a look at coming off of the 2008 highs out here. When you come back to the September 3rd time frame, again, take a look at where the VIX is in relation to that 50-day exponential moving average. Never got back below that line. It did for one little smidgen of time back in November of 2008, but that's it. So with regard to the VIX index, that yellow line out there, that's what you, just like when you take a look at coming off of the lows in 2009, look at how that yellow line held as a resistance zone out here. So fast forward to where it is that we're at inside the markets today. What do we know? We know we're well above that level out here. We're well above the 1951 area. Now, ideally, the setup here is for both bulls and bears. The ideal setup here is let's assume that the New York Stock Exchange, that the Dow, heck, the FTSE's fallen apart. That's given us a piece of information as well. We're in the unfavorable seasonal cycle out here, that we're beginning a cycle that takes us into February and or April of 2016. Doesn't mean there's not good bounces along the way, but that seems like that is a cycle that is playing out here. That being the case, your ideal buy or sell in the marketplace is for the VIX to come down and touch what? About 1951. Now, if that level fails, well, we've got a different scenario. But at this stage here, and I don't think I answered the question about the XIV, but I will when we come back from this break. That was just to keep you over for the next 4-minute session or so. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 304, S&P down 33, gold's off $3. So with 6 minutes to go in the game out here, looks like on the 5-hour chart you're going to get that hammer candle. We'll see what it can do after in the next session, which takes us into the close today. But it's the first bullish sign that we've seen all week out here. So it's worth paying attention to and knowing that on the daily chart, gold has held a support level. Now, back to the question, which was really about the ETF, the XIV, Velocity Shares Daily Inverse for the VIX out here. And the question is, Is it possible for this? Is there anything that this chart tells me with regard to the candle configuration of last week? And the XIV had volume last week to the downside, 286 million shares. And the question, I believe, is, can that wick get filled in? And I don't know the answer to that. I wish I could tell you. Does the candle doesn't represent anything, so it's not a bullish candle by any stretch of the imagination. Heck, it was a gap down, and it was a gap down with volume, and it was moving into a swing point from back here. If you're just going to take a look at it as plain vanilla, which you really can't on these ETFs, because you got to take a look at the underlying instrument. And so in any event, but we're going into the October 13th level that had 222 million shares, the Ebola scare, so to speak, with 286 million shares out here. Now, even though that level held as support last week, it has not held as support this week. And volume this week is similar. It's going to be lighter, but you're going to close below the October 13th level out here. So, just take a look at it just as a straight shooter out here. In trading these vehicles, you're better off, I believe, looking at shorter term time frames and perhaps weekly time frames out here for these. That's the trading volatility. That is just simply like sleeping with dynamite out there, or C4, or some type of explosive. So look for other patterns, I think, on the intraday time periods as opposed to maybe a longer term. But that's the best information I can provide you. So where are we at? Quick peek in on the summation indices out here. NASDAQ still above zero. New York Stock Exchange slightly below zero. So nothing really new out there. We've given you the long-term picture or prognosis out here. There's really not much more that I can truly add. Let me just see what else is going on. Real quickly, let's just go look at Apple, maybe ExxonMobil, see what we've got. So in the case of Apple, let's look at a daily chart. Oh, I was going to look at the ETF structures for you on a weekly. So this has got to be done quickly. Let's change this over to a weekly time frame. We know that the daily, we've got a pullback on light volume. Yeah, the weekly, yeah, that would only make sense. Why did I even think about that? With the blowout volume that we had last Monday, there's really no way to truly benchmark it. Of course, it's going to be a retracement on light volume out here. So skip that idea. That didn't make a whole lot of sense. It made sense while I was just talking extemporaneously, and then you go to the first chart and you're like, like Lewis Black. He does it great. I don't do it that way. Hey, let's take a look at the euro, Japanese yen out here. This thing, let's see what this is doing. Let's see, click on over. Let's see, we got the euro Japanese yen. Looks like it is very close to making the 0.618 retracement level. It is now trading below its most recent swing points out here. So the prognosis, the euro Japanese yen, looks like this is going to trade lower. So I would say our markets are closed on Monday. What you can anticipate, we're handing the ball off pretty poorly to Asia. Euro-Japanese yen is in the process of making a 1-to-1, at least A to B equals CD to the downside. Expect carnage over in Asia, probably in Europe. And we'll see if this pattern here completes to set up a little bounce on Tuesday. Steve Rhodes with TFNN. Have a fantastic weekend. Be safe out there. I look forward to seeing you Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.